Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. The holiday season brings a relatively light data calendar, and now PCE, which is Fed's preferred inflation gauge, was released on Friday and it was lower than expectations. Good morning, JK. How do you read the PCE numbers, and is there any specific event or narrative you will be tracking this week?
Good morning, Swaraj. We just completed a very hectic week last week with a lot of central bank meetings and then macro pointers from US economy. A lot of the data that normally comes in the last week of the month were, advanced to the previous week because this is a very light week in terms of economic news and also, participation by the market, market participants. So, yes, after Fed decision, obviously market had taken it as a bullish sign for the dollar. Dollar had gone up. Yields had gone up and the stocks had taken a hit, but within 2 days we have the PCE number from US, which actually came much softer than expected on almost all the parameters. In fact, the monthly headline as well as the monthly core numbers are just at 0.1%, which if you analyze is going to be very timid inflation. So, of course, this will need to be seen whether it remains consistent. At the same time, even the personal spending, what was less than expected at 0.4%. All in all, this data, which was only the main data that came on Friday, gave some food for thought to the market because market had assumed that there will be very slow progress towards further rate cuts by the Fed, and which is what even Powell said very clearly. There was reaction in bonds, yield coming off a bit, although 10-year once again went above the important 4.50 mark. Stocks recovered. Part of their losses, they had recovered a lot, but then gave up those gains. Dollar has, of course, given up some gains, and then euro and other major currencies are trading at the recent range bottom. Apart from the data itself, the year-end factor also is playing a bit to see the market correction. Historically, we have seen the dollar falls in the last month of the year, and particularly in the later days. Average fall in the dollar in the last month is about 0.8%, but this month we have been on the stronger side due to various factors. But still, at some point, these positions will be pruned by the market, and that will lead to some more correction. But it does not change the overall picture because the US exceptionalism, where we have seen the data on GDP coming better, seen the data on retail sales coming better, and more importantly, other economies don't have any strong pointers to growth. Better growth or even the rates to be held at a higher level. Europe is going to cut more. Almost every meeting there will be a cut by Europe, taking rates towards 2% or even lower. Japan is still hesitant to cut their rates. That's what hike their rates according to what we have seen last week. So dollar is still well supported. But the year-end factor might help it to go down in a correction. That will be temporary, and come next month we will have lot more indicators, not just the economic indicators, but also from the government policies of the new government. One important development was the aversion of government shutdown, as finally a deal on spending was signed up in the last hour. And so that point is taken care of. So we are all set for market going into a holiday. We will have only China and Japan working this week, and India will be, of course, closed for one day on 25. On the data side, we will have some data from Japan. and some GDP number revisions from UK as well. Apart from that, we don't have too much of data to digest as well. On from the Indian side also, we do not have much to digest. We just have to see with a very strong big fall in the stock market of over 5% last week in the Indian market, and the rupee trading at all-time low at 85.10. Some mild correction are possible in this, but again due to year end. And what the market was also looking at was the MPC minutes that was published on Friday, that showed that two of the members were very clearly in favor of a rate cut, because they thought that the food inflation, more than food inflation, other factors favored a rate cut to avoid further slowdown in growth. They saw the industrial production affecting many other things in the economy. So this could, while this is only a view as of now, but then this view can gain ground going forward as we move into the February meeting, and market might start to discount a change in the month of February, which is my view that 0.25% cut can happen by the MPC, particularly if we don't see a strong rebound in the GDP or a strong rebound in the inflation in the coming month. So overall, a quiet markets ahead, but position adjustments should take the dollar slightly lower, including against China. Possibly we go towards 84.80. That's it. Nothing much else actually.
Thank you, JK. And of course, it will be a light data week this week. When it comes to data released on Friday, the PCE, which was released on Friday, showed inflation lower than expected. Monthly core PCE was came in at 0.1%, which was much lower than what markets were forecasting. Even the yields came off a bit after this data. There was an aversion in government shutdown as the spending bill was also signed at the final hours in the US. When it comes to rupee, the MPC minutes released showed two members favored a rate cut. This move may start gaining ground by February meeting in case we don't see a strong rebound in growth. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.